Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Solid Biosciences Inc. annual report. Solid Biosciences Inc. offers a wide range of businesses and services in the field of solid biosciences. The company's primary focus is on developing therapies for neuromuscular and cardiac diseases in the United States. One of its key areas of expertise is the development of gene therapies, including SGT-3 for Duchenne muscular dystrophy, which is currently in Phase 1/2 clinical trials. Additionally, Solid Biosciences is working on treatments for other genetic disorders, such as Friedreich's ataxia, SGT-212, catecholaminergic polymorphic ventricular tachycardia, SGT-501, TNNT2-mediated dilated cardiomyopathy, SGT-601, BAG3-mediated dilated cardiomyopathy, SGT-401, and rare inherited diseases characterized by mutations in the RBM20 gene, SGT-701. The company is also involved in developing platform technologies, including capsid libraries, genetic regulators, immunomodulation technologies, manufacturing purity, and dual gene expression. These technologies are designed to improve the efficiency and effectiveness of its therapies. Furthermore, Solid Biosciences has established partnerships with various organizations, including Ultragenyx Pharmaceutical Inc., University of Washington, University of Missouri, University of Florida, and ICS Moduri, SBA through collaboration and license agreements. This demonstrates the company's commitment to advancing its research and development efforts through strategic collaborations. In summary, Solid Biosciences Inc. provides a range of businesses and services, including gene therapy development, platform technology development, and partnership establishment, all aimed at addressing various neuromuscular and cardiac diseases. Solid Biosciences Inc. market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $2 billion. Solid Biosciences Inc. trades at a higher price-to-book ratio of 3.08 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 27% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for SGT Inc., a biotechnology company, are multifaceted. While there is no single primary driver, several key areas have been identified as crucial in impacting the company's financial performance. One significant factor is regulatory approvals for new products. The approval of treatments such as SGT-3 can lead to substantial revenue growth, as seen with its plus 288% increase. Licensing agreements and collaborations also play a vital role, generating milestone payments and royalties that contribute significantly to revenue. Research and development expenses are another critical area, with the company investing $58.3 million in 2025. Financing activities, including net cash provided by financing activities of $194.4 million, also have a substantial impact on the company's financial performance. Market conditions in the pharmaceutical and biotechnology sectors can also influence revenue growth or decline. The company must navigate these factors to ensure its continued success and growth. By closely monitoring these areas, stakeholders can gain a deeper understanding of the drivers behind SGT Inc. revenue fluctuations. The company's debt level has undergone significant changes over the past year. Total liabilities have risen from $51.4 million in 2024 to $52.5 million in 2025, indicating an increase of approximately $1.1 million. This growth is largely driven by a substantial rise in derivative liabilities, which increased from $3.2 million to $9.2 million. In addition to the increase in debt levels, interest expenses have also seen a significant change. Interest expense has risen by 159.7% or $543, indicating a substantial increase in borrowing costs. Furthermore, the company's net interest expense has shifted from a negative $340,000 in 2024 to a positive $203,000 in 2025, suggesting that the company is now paying more in interest than it was previously receiving as a credit. Management is cautiously optimistic about the company's outlook, citing sufficient cash reserves to fund operations through 2028. However, they acknowledge that additional funding will be necessary beyond that point. The company faces significant risks, including regulatory approval for its candidates, competition from biosimilars, and patent infringement claims. In terms of strategy, management is focused on navigating these challenges while continuing to invest in research and development. They are also mindful of the potential impact of inflation and interest rate changes on operations. Despite these uncertainties, the company remains committed to its long-term goals and is working to mitigate risks through various measures, including patent protection and tax planning. Overall, management's outlook suggests a balanced approach, prioritizing both short-term financial stability and long-term growth prospects. While there are challenges ahead, the company appears well-positioned to adapt to changing market conditions and capitalize on emerging opportunities. The company's financial activities have been notable in recent years. One key aspect is its approach to shareholder value creation. On the one hand, the company has chosen not to pay dividends to its shareholders. This decision suggests that management believes the company can generate higher returns through internal investments rather than distributing profits to investors. On the other hand, the company has actively engaged in share buybacks. By repurchasing shares from the market, the company aims to increase earnings per share and boost investor confidence. This strategy demonstrates a commitment to shareholder value creation and a willingness to allocate capital efficiently. There are valid concerns about inventory buildup and supply chain disruption in the industry. One major concern is the reliance on third-party manufacturers, which can lead to a loss of control over the production process and increase the risk of disruptions. Another issue is the time-consuming process of testing, validation, manufacturing, and delivery of products to clinical sites, which can cause delays and inefficiencies. Additionally, tariffs and trade restrictions are causing significant problems in obtaining necessary raw materials or product components, leading to further delays and disruptions. The limited experience in gene therapy manufacturing is also a concern, as it can lead to production problems and delays due to the complexity of the process. These issues highlight the need for careful planning and management of supply chains to mitigate these risks and ensure smooth operations. That concludes the financial summary for Solid Biosciences Inc. Feel free to comment below, and I will be happy to answer them when possible.